Everybody, this is Osprey from MyChartCoach.com. And in this video, we're going to take a look at the indices, and then we're going to take a look at volatility. So first up, let's take a look at the Dow Jones Industrial Average. And as you can see here, it closed down 2.3% on Friday. So that was a big pullback. The middle Bollinger Band failed to turn into support. So that's the 24,400 level here, the dotted purple line. And so what needed to happen is it needed to turn into support for a new uptrend to begin. As you can see in February, the Dow Jones Industrial Average got above that middle Bollinger Band, failed to hold, and it pulled back. It got back above again in March, failed and pulled back. And then here we are again in April, above the middle Bollinger Band, and then it failed and pulled back. So that's 3 times in a row. It's going to need to turn that middle Bollinger Band at support and then get above this 150-day simple moving average to get a new uptrend going. As you can see on the first attempt to get above that middle Bollinger Band, it got 2 white candles closes above that 50-day simple moving average. And then in March, it got 1 close above that level. And then now in April, it didn't even get above the 50 or even above the 100-day simple moving average. So each bounce is shorter and shorter. It's in a downtrend right now. As you can see here, there's a bearish downtrend, and you have a let's see here, you have this this is like a falling wedge type of pattern, and so if there's a break below the ascending support line, this support line here from the lows, and then that's lined up right now with this 200-day simple moving average at 23.478. If there's a close below that level, that would be a major red flag, and then you could see that drop down to the 300-day simple moving average at 22580. Now, right now with the close back below EMA's 4, 8, and 13. That's the pink line and orange lines. It looks like it wants to push back down and retest this 200-day simple moving average. Now on Monday tomorrow, if it can get back above the top moving average over here for the EMAs, if it can get back above, what is that, 24194. Okay, so they're all around the same level, but that EMA 13 at 24194, if it can get back above that level, then that'll signal, okay, it's trying to, that bounce that happened end of day on Friday, it's going to signal a continuation of that. Now, if it struggles with that level and that turns into resistance on Monday and it fails to get back above 24,000, that's going to be a red flag, and you could see that drop down to that 200-day simple moving average. If you look on the 15-minute chart for the Dow Jones Industrial Average, you can see it has this downtrending channel that happened on Friday. It broke below all the moving averages. If you look up here, it made a higher high close on Thursday, and so failing to get back above back to that 24,600 level was a red flag, and then it had the gap down. And it failed to get back above EMA 13 here, and so it has to get above this 23,954 level in order to get that bounce going. So right now, it bounced back up to that level. Is this going to be a bear flag, or is it going to bust through resistance? Well, if you see it back above 2410, above this 100 simple moving average, that's going to be your clear sign. Okay, it's bouncing today, and the bulls are back, and they're trying to push it higher. And so then you'd be looking for a run back up to that 50 simple moving average. If this if the 24,000 level is resistance, that's going to be your red flag, and then it needs to hold that low close. It needs to stay above that 23.8 level. If it drops below that, then you're looking at 23,650 from that low close on the 4th, and then the low close down on the 5th is down at 23,400. That is the downside risk. It came up, it failed to make a new high, and now it came back down, and now it gave back all the gains from that move on the 4th and the 5th, and so now if it breaks below that support level on the 4th, you're looking at a retest possibly of this low on the 2nd. So that is the downside risk. For the S&P 500, as you can see here, it came down and it's bouncing off of the 200-day simple moving average. That's the red line down here. It needs to hold this level. That's at 2593. Okay, so if it can hold that level, that's gonna, it's hit this level, so many times. You can see these lower wicks. All of these candles here have been testing this 200-day simple moving average support zone. Notice in February, it just had to hit this level level once, and it bounced quickly and then took off running. And then look down here, it's just hitting it, hitting it, hitting it, hitting it, hitting it. How many times can it hit the 200 without breaking? It's like continually, hitting a window, and you're weakening it and weakening it, and eventually it's going to break. So if you hit that 200 enough times, support's going to break, and then you're going to see that drop down to the 300-day simple moving average at 2519. Now they're trying to save the day here on Sunday and saying that we're not heading into a trade war, and just tone it down a little bit. We got a little worked up on Friday. But then Muchin was on Face the Nation this morning, and he said again that there's a possibility of a trade war. So they keep saying one thing and then they say something else, and then they even say it in the same sentence, and so it's a very difficult read, and I think people are getting nervous, and you're going to be able to tell by what direction we're going to be headed by whether or not this 200-day simple moving average holds. If it holds and bounces, then everybody that loaded calls on Friday, because a bunch of people have been trying to time these bounces, and so a lot of people flipped the script going into the close, and they covered their puts. They closed out their put positions, and then they loaded up on calls, and people sold volatility, and so it was that big. Everybody's thinking that it's set up for a bounce now, and so we'll see. That it's closed. To me, the charts are still super bearish, and this was a very bearish close, especially since it was 3 white days in a row, 3 white candles in a row here. So you can see you had Tuesday, Wednesday, and Thursday white candles, and you had a close above EMA's 4, 8, and 13. It was really cooking, and then now you drop back below all those levels. To me, that wasn't a signal to buy on Friday. That was a signal to take risk off the table or go short. And so if you weren't already, and I mean that's what the charts are saying. They're signaling downside risk. And so the futures trading here is getting ready to start. We'll see if there's a bounce, and if it gets back above EMA's 4 here at 2626, that'll be the start. If you see 2626 turn into resistance, and definitely if you see a drop below 2593, that's going to be your big signal that the chart is broken. Okay, look at the SPX 15-minute chart. Same pattern. Notice how it made a lower high up here. So it's the lower high that was your clue that it wasn't so strong on Thursday. So it made a high up here, and then you could see here it's a lower high for the high close. We go by the closes, and so since it failed to close it at that same level, the high level on the 5th, and it failed to close above that level, that was your signal that it was cooling down a little bit, and then you had the gap down, and then it's below all the moving averages except for EMA's 4 and 8 here on the 15-minute chart. You could see the bounce that I'm talking about, how people played this reversal here. It picked up volume into the close, and then it had the big volume spike, and people tried to load here going into the close. You can see it was all the way up here above EMA 13 at 2609, but it pulled back, and so that was a red flag. I mean, really, if you're trying to, it's really safer to wait until you get this break above the middle Bollinger Band before trying to catch the falling knife. When we're playing a bounce, you can try to catch the falling knife and time the bottom, but if you wait until it gets back above the middle Bollinger Band, that's more of a signal that it's heating up, and then if it can turn that 50 simple moving average into support, then the chart's starting to cook again. So down here, this is just a signal that this is looking, similar to a bear flag. Okay, so you have the it's coming up and then over here. Is this bear flagging here? Because a bear flag, when you have a big pullback and then it bounces and then it fails to break horizontal resistance, you can see the resistance level here. It failed to close above this white candle here, and so that to me is looking more like a bear flag than it is looking like a chart that's getting ready to reverse. And so we'll see what happens. If it drops back below EMA 4 at 2602, that's going to signal downside risk, and then it has to hold 2590. That's the low close. If that breaks, you have 2580 on deck. That was the support level from back here on the 3rd, and then if that broke, then you're looking at a drop down here to 2560. Now, and as you can see, there's a ton of work to do to get a reversal going. You have EMA 13, you have the middle Bollinger Band, which is the 20 SMA, the 200, the 100, the 300, and the 50 SMAs. Has to bust through all these moving averages, including EMA 13 down here, in order to get a bullish chart again. So it's not, this chart isn't going to be, considered technically, bullish again until it gets back above that 50 simple moving average. So it has a lot of work to do. It's just a clear signal that there's major bearish pressure. When you have a big run up and then it fails to break out higher and then it gives back the gains, many times that's pulling the momentum back down to the downward. And so this has been unprecedented times, and there's been big swings back and forth, and so there really is no telling what's going to happen. But the charts are signaling more downside risk on the close on Friday. If you look at the Nasdaq Composite, ticker symbol COMQ, MPQ, you can see here it closed down over 2%, and so it failed on Thursday to get above that EMA 13 and 100-day simple moving average. The black candle formed. The black candle was a red flag. You had multiple white candles with the black candle after a gap up open, and then now you have the red candle. It was a this was a signal of caution, and so basically not getting back above that 100-day simple moving average was a red flag. And then when it failed to break, this is signaling more downside risk. And now it's back below EMA's 4 and 8. So now it's back in the same pattern. When all these candles are heading lower here, it's failing to get back above EMA 4 and 8, the pink and lime lines. And so now it's back in that pattern. And so let's say it does bounce, it has to get above EMA's 4 and 8. That's the first step. And so you'd want to see it get back above 70.20. If it failed to get above that level, if 7,000 turns into resistance, or if it definitely continues lower, and then what you're trying to what needs to hold is this 6850 zone. If it busted below that, then you're talking about a test of that 200-day simple moving average. I mean, that looks like where it's headed now that it's back below EMA's 4 and 8. Now of course it could bounce because things have been crazy, and it's really hard to anticipate exactly what's going to happen with the markets moving on every single headline. We can get a headline 1 minute that sends the market lower, and literally minutes later, seconds later, we can get a positive headline and things are racing again. So it's back and forth, back and forth. And so usually this is happening when usually you see these types of swings when you're getting a breakdown. Now we're heading into record earnings. They do start on Thursday, where we'll be having the financials coming in with the banks reporting, and so that could be the time, like later in the week, where you could get some reversal going. We'll have to see. There's a lot of information coming out. We have Bolton coming in. We have China speaking on Tuesday. Just tons of stuff going on. This Facebook, right, is on Tuesday as well, and so they're going to be speaking. Them getting grilled on in front of Congress on national TV. I don't know how good that's going to be for the markets. And so if you look at the Nasdaq Composite on the 15-minute chart, you can see here once again this was your red flag. It came up to this was a bigger red flag because it came up and it hit the 300-day simple moving average, right? That's the blue line, not day, but the 300 simple moving average on the 15-minute chart. Hit that level, pulled back. Then it came back up and it hit that level again. It made a lower high close, and it dropped back below that 300 simple moving average. This was your signal that it was breaking down, and it closed below middle Bollinger Band on the close. So there were all these red flags on the close on Thursday that, yeah, this is hitting resistance here. And then you had confirmation right at the open on Friday, and then once again it broke below all the moving averages, and then here it is. It actually closed, if you look over here, EMA 4 is at 6914, basically 6915, and it closed at 6915. It closed right on EMA 4. If you see the Nasdaq Composite trading below 6915 tomorrow, that's going to be your signal the bears are in control. It's still in this downtrend, and then you're going to see 6890 tested. If that breaks, it's 6850, and then 6810 would be the big drop back down to test that support level from the second. Now to the upside. Okay, let's say everybody loves the fact that now we're going to tone down the rhetoric, because in my opinion I think that it's going to be what China says next. We've already done all the talking. Now we need to see they are pressed now to be we put them in a corner where they can't come across as weak, especially with Xi having his he's in office for the remainder of his life, and so this is a defining moment. So this is a lot of uncertainty headed into this week. so many things could move the markets in either direction. And so here we have EMA 13 as the big level to break. If you see tomorrow, the Nasdaq Composite trading above 6938 and it's holding that level, then that's going to be a signal that it's bouncing, and then you could see a run back up here to test these levels. It has to get back above. It's the 7,000 level that's going to be the big level. Up here at 7,000. Get back above 7. Then you're talking about a possible run back up to that 300 simple moving average. Now that it went up, failed to break out, and then gave back all the gains, it seems to me like it's more likely to come back down and retest these lows. Now it's all going to be about breaking that 6940. Will make it a nice even number above 6940 signals that it's trying to bounce. If it stays below that level, and definitely if it drops below 6915, that's going to be a major red flag. Now let's look at the Nasdaq 100 index. As you can see here, it had the big pullback. It closed below. Same thing. This is the same. This is the it's basically the same chart. It hit that EMA 13 and 100-day simple moving average, failed to break after 2 white candles in a row. And then it closed back below EMA's 4 and 8. This is a signal. It's still in the bearish downtrend. The bears are still in control. There's still more downside risk, and it looks like the 200-day simple moving average could be on deck at 6286. That's, it looks like it should, it hasn't even been hit on this pullback. And so, it just seems like, with all this pressure. Now to the upside, if you do see it close or back above 6501, then that's going to be a signal they're trying to bounce it. You never know what's going to happen. We could come out with some great news and everything's going to be peachy keen. And then, EMA's 4 and 8 are going to turn into support, and then you'll be back up at this 100-day simple moving average. And once it turns that 100-day simple moving average into support, then you could be talking about, okay, yeah, it's bouncing. We could get a test of that middle Bollinger Band and 50-day simple moving average. Right now, it's having really tough time getting above EMA's 4 and 8. If they remain resistance, it signals more downside risk. If we look at the Nasdaq 100 index, here we have the 15-minute chart down to 2.45%. You can see it closed with the bearish downtrend here. It's in this bearish channel. It failed to make that high, that new high close. It got below all the moving averages. When you see anything that runs up on the 15-minute chart to test that 300-day simple moving average, when it's the top moving average on the chart, and it fails to turn into support, especially after a double test, that's your big signal. Okay, resistance isn't breaking, and it's probably best to head to the sidelines if you're in. Lock in those gains after this huge run from down here. You can see it ran straight from 6.3, down here near 6.320 or 6.330, all the way up here to 6.630. It had a 300-point run in a short period of time, and now it's given back a large portion of those gains. It closed back below EMA 4. I mean, this is totally bearish. People that were playing the bounce here, I don't see where they were seeing. I don't see it on the charts where everybody was getting all pumped up on calls into the close, and I think the only thing they're thinking is that I've been playing this. When it pulls back, it's up. When it's up freaking huge, I freaking exit and I buy puts, and then when it's down really big, I exit and I buy calls, and it's been working, and I'm just going to go back and forth and just keep playing that pattern, which works great, and people I know are making money on it. But if you're a technical trader and you're following the charts were not signaling this is time to load, to go long on Friday. They just weren't. I didn't see it. And so here's the Russell 2000. It closed down nearly 2%. This is the daily chart. This is the small caps. This is the penny stocks. This is what everybody was talking about. This is what you need to buy in 2018. Check out the run over here. They're like, yeah, it's all about the small caps, man. This is just going to be so great, and they're going to do so good. And it came up, and it hit the top, and then it pulled back, and then it came back up, and it made that lower, just like I was showing you on the 15-minute chart. How when something fails to make if it fails to make a higher high close, and especially if it makes a lower high close, that's a sign of weakness. And that's what happened on this daily chart as well. This was your red flag. If you see it come up and then come down, and it's hitting this double top potential zone, and it fails to even because what you're looking for is a higher close. And if let's say this closed at on this bounce at 160 in March, so that would signal more upside potential, but it didn't even fail to close at the equal level, and it closed below, and that was signaling downside risk, and now it's pulled back. And this is what I call, this is the double top. It topped out, and now it's pulling back, and now it's back below all the moving averages. It's below EMA's 4 and 8, riding EMA's 4 and 8 resistance lower. And as far as my technical analysis theory goes, if it's a risk to hold anything long that's forming candles below EMA 4 on the daily chart. It is positive to be short if stocks, or if a stock, an indice, a cryptocurrency, a commodity, anything that you're charting that closes below EMA 4 on the daily chart, that is your signal to be short. That's what you do. Just like you ride. Look over here on the September run. So check out how all these candles are forming above the pink line, right? You ride when EMA 4 is support. Okay, EMA 4 turns into resistance. You ride it lower. Okay, so they're riding EMA 4 higher. Now EMA 4 was resistance. They were riding it lower. It got back above for a 3-day run, right? Tuesday, Wednesday, Thursday. Okay, this is happening. We're heading into earnings. This is going to be awesome. We're going to rally. This is the big one. This is the big one. We loaded heavy, which they didn't because there isn't a big volume down here, and that was your clue. And I've talked about that in other videos, and that's why I wasn't convinced that this bounce was real, and that turned out to be correct because it didn't have the volume. And so basically, I think people have been suckered into thinking that this earnings season is going to be the big savior when it could be the big head fake. People could be setting themselves up for the slaughter if everybody's thinking that earnings season is going to save the day, which it could. I'm not saying that it's not. I'm just throwing out the hypotheticals of everything that could possibly happen, and they could come out where they don't save the day, and then what's that going to do? If there's so much pressure going on, then that could pressure from our politics and from our policies and from all the craziness that's going on in the world. If the earnings season doesn't save the day, then what's that going to do? You know what I'm saying? Like that could get people that could really start selling, and then you could have more downward pressure. So it just seems this is a good time to not be too risky on the long side. With we have to see how earnings play out. Because they may not save the day. I think when everybody's thinking that something's going to save the day, there's a good chance that it's not going to happen because so many people are banking now on earnings to be the savior that it could turn out to be the big thing that sets everybody up for more downside risk. And so if you and I know they're going to be record earnings and they're going to be great, and I would love to see them get the markets rallying and get another big bull rolling, a bull run going, and to get the markets heading in a new uptrend and cruising. And I'd love to see the Russell 2000 break 160 and close above and head higher. I mean, that would be awesome. I would love that as much as anybody, but right now I'm not seeing that in the charts, and I think that there's a lot more uncertainty. And if you look at the volume bars down here, look at the volume on this bounce. Okay, so it's half the volume of the bounce on the February drop, right? And so you have the big drop in February with the huge volume spike. We didn't get that on this drop. So in order for us to get a real bounce, we need the big volume. That's what a lot of technicians are saying. It's not just me, but I think that if you see us pull back and let's say the Russell 2000 hits this 200 and it breaks and it drops down to that 300 simple moving average and hits 143, and you see 70 million or more traded, even if you see above 60 million traded, I think that would be a signal. Okay, there it is. That's the bottom. We've got the big volume. We're ready for the bounce. And so that's what I'm looking for, is that big volume spike. Look at the Nasdaq here. Okay, so it had on the February bounce. Look at this. It had when in February when it hit the lows. Look at that, over 1 billion shares traded. Okay, let's look at the bounce here. It traded 700 and something million. It just didn't have that same volume on the bounce this time. You're not seeing, you want to see that 1 billion shares traded. So, I mean, there's bigger, okay, here, let's look at the S&P 500. And yeah, so you have down here on this bounce, so you could see the bounce in February. You're at 4 billion shares. You're down here in this 3 to 4 billion on all these volume bars when it's hitting the lows, and you can see the big drop here. This lower wick, it hit 3.7 billion or something. And then now let's look at the lower wick on this candle. So you have the lower wick here. okay, down here. And this is making, you know, your 3.7 billion. And now look at the lower wick here. Now you're down here at 2.5 billion. So you have much less people are believing in this bounce than in this bounce. Okay, now I know some people will say that's just apples and oranges and it's not a big deal, but it really does show, you know, when you see the S&P 500 hit that 300-day simple moving average at 2519 and you see 4 billion shares traded in the day, that's going to be your load signal. That's what I'm looking for. I'm looking for 4 billion shares, and I'm looking for that you know, that big capitulation drop. I mean, now that to me that would be more of a buy signal. To me, that this is not a buy signal on Friday. I'm sorry, but I'm not seeing it. And so here, if we look at the you know, we look at the IWM 15-minute chart, and you can see it had the same thing. It made the high, the lower high, the downtrend behind. You know, all these charts are the same. Below all the moving averages, it got above that EMA 13, and it faked. I put out alerts in our chat saying this was a bull trap. Now I could be eating my words tomorrow, and we could, who knows? Futures could be rocking right now, and we're going to be green, and it's going to be party time. Everybody bought calls. I'll be very happy for you that you're making money. But to me, this was looking like a bull trap on Friday, you know, and then that pullback, failing to close above EMA 13, to me was confirming that. You know, they bounced it. People were, you know, it's the end of the week. You know, they're closing out their put positions. People are locking in gains on the big pullback. There's a lot of options action going on a Friday, you know, heading into an uncertain weekend. And so I think some people got suckered into thinking, yeah, we're going to bounce tomorrow, and they loaded up. Now it could work out for them, all right? But closing below EMA 13 is not a good sign. If it closes below EMA, if you see IWM below EMA 4 at 150, that's going to be your red flag. You know, if EMA's 4 and 8 don't hold, then you're looking at a drop down to 149.50, and then you're looking at, you know, then you're talking about possibly 148s back on deck and 147 as the low from the second. You know, it ran up, it failed to break out, and it pulled back. You know, is it going to bounce here and then come back up and retest these levels and then break out and head higher, or is it going to come down and retest these lows first? That's the million-dollar question. Okay, let's look at VIX. So Kramer came out on CNBC on Friday, and he threw everyone a bone, and he's calling VIX as saying that we're at a market bottom right now because the VIX has been forming steadily lower highs as the markets have been turbulent. We failed to make higher highs on VIX at higher high closes. It's similar to what I was talking about a minute ago. You know, you have a high here, the big high, right, and then you have a lower high here, okay, and then it came down, it made a high, right, but then it came over and you've got the higher highs. Okay, so you have that. This is the high now. Okay, so that's kind of, you know, so you had the drop. It came down. To me, okay, it made a higher high in March, and then it came down, right? And so now it's hitting these other, you know, each of these candles in the last 2 weeks have been failing to make a higher high. Well, to me, I'm seeing a really tight symmetrical triangle pattern has formed. And I think it could go either way right here. So what you have is you have descending resistance, okay? And obviously all through here you've got descending. Look how each one of these candles is hitting that descending resistance line. They're working it down. Now you have ascending support, okay? So look how all these candles are hitting this green line, okay? So it's between 22 and 18. All right. If you see a close above 22 on VIX, this is the you know, this is the VIX Volatility Index. There's multiple ones, and they all are a little bit different. And so for VIX, okay, so it's a close above this ascending or descending resistance line. So at 22 or above on a close, that would be super bullish, and that would put 25 back on deck. And then if you can get above 25, that's going to be your clear signal. Volatility is super freaking strong, and so I think it will be considered very strong if it breaks this descending resistance line. So that's what I'm keeping an eye on tomorrow and this week. And then also I'm watching this 1950 level, which is the 1956 is the middle Bollinger Band, and then also it's lined up with that 50-day simple moving average basically at 20 there. And so if this 1950 to 20 level breaks, then you have 18 on deck. Notice how this support line, you know, it's gonna be it basically, if it gets back below 19, that's going to be your signal. Okay, volatility is cooling down. And then if you did see it close below this 18 level, then, you know, Kramer is going to be right. His analyst is going to be correct. and then you're going to be seeing a drop back down to this 100-day simple moving average at 1522. With all this stuff going on, through last week, over the weekend, it's pretty amazing to think that volatility is going to drop down to 15. But you never know what's going to happen. We have earnings season. If earnings season, rocks the boat, because with financials starting off and everybody's banking on financials to be the big money maker, if they disappoint, that could set off a sour note for earnings season. What if they do really good and people still sell the financials? That's going to be a major red flag. So 22, 18, two big levels next week. Okay, let's look at VXX. This is the S&P 500 VIX short-term futures ETN. And so check it out. It is actually above that 300-day simple moving average. It closed above. So this is one of the things that's kind of contradicting what Cramer's saying, in a sense, in my opinion, is if you look not just at VIX, but you look at all the different vehicles that trade VIX, and you can see here that you've got this, a pretty bullish setup right now on the chart. I mean, it's very bullish, actually. It's trading above every single moving average on the daily chart. As a matter of fact, the chart could not be more bullish than it is right now unless it broke out above these high close resistance levels. That's how bullish the freaking VXX chart is right now. It's trading above EMAs 4, 8, and 13. It's trading not only above those levels, but it's trading above the 100, the 200, the 50, the 20, and the 300-day simple moving averages. It's trading above every single moving average on this chart that we follow. Every single average on this chart, that the averages that the moving averages that we follow, it's above every single one. Meaning it could not be more bullish. It's signaling to still be in the trade. That's what the chart's signaling. And so for VXX, if it stays above the blue line, that's a signal to ride. That's at 47.83. There's no reason to exit it if candles are forming above that level. Now, if it closes below, and it is testing that level, if you see it trading below 47, that's going to be your signal. Okay, VIX it's cooling down. It's cooling down, and you're looking at 45 on deck. As long as the middle Bollinger Band's holding, it's still in a bullish uptrend. But once candles get above that magical blue 300-day simple moving average line, they're always blue on my charts, that's your signal that this could break out higher. It has to stay above. I always use this as the stop loss level, and so you ride if it's above, and then if it drops below, you use that, you exit. You could get shaken out. You can see with these red candles, but if it keeps holding, it could push higher. A break above 52 would be really bullish, and that would put that 55 high from February back on deck. Okay, let's look at VXX on the 15-minute chart, and so this will show you how it had the big run up on Friday, and then came at the last hour, and people decided to take profits. And they started locking in gains, and you could see it pulled back. It was holding EMA 4, and then people really locked them in as the indices were bouncing. As you were seeing this bounce over here on all the indices, you can see how they were bouncing. At the same time as they're bouncing, now you have VIX dropping. VIX is pulling. So there's always a correlation between the two, and so as people were trying to play the bounce, they sell the volatility, and so they sold it right back down to this magical level, which is the middle Bollinger Band, and it's also lined up now with the 100 and 200 simple moving averages, and if it can stay above 49.50, it's still in play. Now, if it drops below 49.50, that will signal that the markets are bouncing, more than likely, because this has been the correlation between volatility and the indices right now, and that correlation could change, and we will keep an eye out for that. But if the indices do bounce tomorrow, then you're more than likely going to see VXX break middle Bollinger Band support, and if it does, then you're looking at a drop down to the 50 and 300 simple moving averages down here in that 48.36 support zone. If these levels hold, if it stays above 49.50, then you could see a run back up here to that 51.50 level, and that would be the big level to break. If it could get above that, then you're talking about a run back up here to these higher levels. You have 53s, back on deck. Okay, so it's trying to reverse here, and it's currently trading above all the moving averages on the 15-minute chart, except for EMAs 4, 8, and 13. That was a bearish close below those levels, but it did close above the middle Bollinger Band and the 50 simple moving average, keeping it still in play on Friday. According to our strategy, this was still in play on Friday, but for a long trade, but it was signaling, you know, some caution now that it's back below EMA's 4 and 8 and 13. But since it's above the middle Bollinger Band and holding support, it was still signaling to ride long over the weekend. That's what the charts were signaling. I'm not saying, I'm just interpreting the charts. Okay, and so here's TVIX. Okay, this is the short term. Okay, this is 2 times VIX. Okay, so when you have you know, VIX is at up 6%. Then you have TVIX up 11%. You know, it could be 11, 12. It's always around that two times level. And so it's hitting a key resistance level. It's been failing to break this 200-day simple moving average. It's currently at 1117. You can see you know, multiple candles have hit that level recently, and it keeps on pulling back. It actually hit that level again on Friday. If you see TVIX close above that 200-day simple moving average, and this is also lined up with the high close from Monday, above 1117, that's going to be your major bull signal. It'll be a clear bull signal if they let it close above the 200-day simple moving average. Then it would have to stay above that level. That would be the stop loss level. If it stayed above, then you would keep riding and look for a run up to 1350. If it, you know, got above that 200-day simple moving average and dropped back below, it's signal it's not ready to go. It's been churning between 950 and 11, and so if it did drop below this EMA 13, currently at 966, then you're looking at a possible test of this middle Bollinger Band and 50 simple moving 50 to simple moving average support test, basically 850 zone. That 850 to 9 level is going to have to hold to keep this uptrend going. But right now you want to see it stay above 10. Above 10, break through 1115, and TVIX could get moving higher. Once again, notice the big pullback into the close. Okay, so they sold off TVIX, and then, you know, but it still held that middle Bollinger Band. It did close below EMA's 4, 8, and 13. It closed below the 200 simple moving average. It needs to get back above all those levels. If you see TVIX trading back above 1050, that's going to be a signal that it's back in play, and then you want to see this big, you know, this 11 resistance level break, and then that would be your clear signal that it's ready to head higher. Now to the downside, if it came down here and it tests 1025 and drops below, that's going to be your signal. Okay, the markets are bouncing. You know, volatility is not happening today, and then you're looking at a drop down to this 350 simple moving average down between 980 and 991. Okay, let's look at UVXY. Okay, so this is another, you know, this is the Ultra VIX short-term futures ETF. Now this trades options. For TVIX, it does not trade options for the options traders. So people that want to trade volatility through options, many use UVXY. They also use VXX as well. And so basically, this is, you know, hitting that same 200-day simple moving average level. It closed above that level on that February move, but it has failed to close above that level this time. If it can close above 2076 this next week, that's going to be your signal. Okay, yeah, UVXY is ready to head higher. That was our signal. You know, if it closed back below like it did here, it failed to turn the 200 into support after closing above. That's a signal of downside risk. Once above the 200-day simple moving average, it has to stay above. You know, you just use that as your stop loss level and don't hold if it closes back below. Now you've got the, you know, the symmetrical triangle pattern going. You know, a break above 22 is going to signal that it wants to head higher. A drop down here below 17 is going to signal downside risk. You know, so 1750 is going to be the big level to hold. You know, that's to keep that uptrend going. You know, a drop below 1750 would be a signal that the uptrend is breaking. You know, above 2076 signals that it wants to head higher. If you look at it on the 15-minute chart, it's the exact same pattern. You know, they sold it off. It did close above that 200 simple moving average, but it's back below EMA's 4, 8, and 13. If it can get above 2021, that's a signal it wants to head higher. If it gets below that middle Bollinger Band at 1979, that's going to signal downside risk, and you could see a drop to that 50 and 300 simple moving averages down around 1910. Okay, and if we look okay, yeah, we already looked at this. So yeah, so that's it. All right, so we're going to be keeping an eye out on these key support and resistance levels tomorrow, and we'll see if the markets can either bounce on Monday and get a reversal going, or if there's going to be more downward pressure. Okay, thank you very much for viewing this video. To learn more about charts and technical analysis, come check out our chat. I'll post the link below the YouTube video. Thank you.